Good evening, everyone. Just waiting for a few more participants to join and then we'll start.
Good evening, all. Thank you for joining today.
All right, I think we can start. Am I audible, Sandesh?
Yeah. Audible.
Okay, perfect. Good evening, everyone. Thank you very much for joining us. Quite a pleasant evening today in Bangalore, especially people who are joining in Bangalore. Some of us are working from home. Few of us, unfortunate ones like us, Sandesh and me, are working from office. Our sincere apologies that we had to reschedule the webinar. It was scheduled for last week, but for some reasons we had to move it. But yeah, good day to have this webinar. Thank you very much for joining in such large numbers. I can see almost 200 plus people have already joined. So thank you very much for that. All right. So from the time this judgment has come, or maybe even before that, there have been a lot of expectations as far as what will be the judgment, what impact will it create? Can I claim the credit? Can I avail the credit? Can I utilize the credit? Can I hold the credit? For how much period will I be holding this credit? Okay. So to take you through this judgment in very brief, because all of us would have gone through some material relating to this judgment. So we'll in very brief summarize what this judgment is all about, and then take you through what we believe could be the impact because of this judgment, especially on real estate, but also on other incidental and ancillary sectors as well. And after that, maybe after 45 minutes or so, 45 to 50 minutes, we'd be more than happy to take your questions. Okay. Also, very important that you register for this webinar directly instead of using a forwarded link. The reason is that we will be able to communicate with you and also share the recording as well as share the PPT as well with you only if your email IDs are registered with us. Okay. So yeah, again, thank you very much, and hopefully we are able to, bring some value for you for the next 1 hour or 1.5 hours, which you are going to spend with us, right? Sandesh, can you just change the slide for us?
Sure.
All right. So, what is the issue which we are talking about here? The issue what we are talking about here is whether on construction credits, okay, which are availed by a developer or by any person who is constructing an immovable property, whether he is entitled to claim input credit on the same or not. The GST provisions specifically which have impact are section 17(5) C and D. So if you look at how the sections are arranged in the GST law, section 16 says anything which is in relation to business, you are entitled to claim credit of the same. Section 18 allows you credit under certain special circumstances. And section 17(5) specifically says, forget what section 16 says and forget what section 18 says. If you fall under any of the categories mentioned under section 17(5), those credits will be treated as blocked credits, as in you are not entitled to take the credit. So the entire issue in this case of Safari was as far as section 17(5) and specifically C and D is concerned, where it is mentioned that works contract services or goods or services used by you for construction of an immovable property, you will not be entitled to claim credit of the same. That's what section 17(5) C and D in the nutshell say. So the issue before the Orissa High Court, okay, before the matter went to Supreme Court, was that the taxpayer, that is Safari Retreat, was constructing a mall, okay, and they had acquired a lot of goods and services. Now, very important here that they had acquired goods and services, and the question before the Orissa High Court was specifically restricted to section 17(5) D, and the question of 17(5) C never came up before the Orissa High Court. Okay, so they had acquired a lot of goods, they had procured a lot of services for the purpose of construction of mall, and on that they had paid GST to the vendors. The objective of the developer was that he will rent out this mall, and by renting it out, he will, charge rent on which GST is required to be discharged. The question now was whether, based on section 17(5) C and D, whether the developer or in this case the mall construction person was entitled to claim the credit of the GST paid to the vendors for the construction purposes. Now, when the matter reached the Orissa High Court, they read down section 17(5) D. When they say read down, that means they modified the meaning a little bit of section 17(5) D and said the credit should be allowed. Logically, the credit should be allowed. Okay. Now, this matter came up before Supreme Court because even the revenue challenged this, and in certain cases, because at different points of places in the entire country, this question was there. Some of them were agreed by section 17(5) C, some of them with 17(5) D. So all these matters went in a writ petition before the Supreme Court, where the constitutional validity of both 17(5) C and D was challenged before the Supreme Court. Right. Over to Sandesh for to deliberate on the next slide.
Thank you, Hanish. Thanks for the introduction. So, as Hanish pointed out, the question which was before the court, rather the issues for consideration before the Supreme Court were rather three things. One is whether, everybody has already read this, whether plant and machinery, which is there in this section 17(5) C, is same as plant or machinery, which is there in section 17(5) D. Both the sections are actually on the screen. That was one thing which the Supreme Court had to decide. The second point which the Supreme Court had to decide was whether plant and machinery definition, the definition of plant and machinery is given under section 17(5) itself, after 17(6) rather, to define what exactly is plant and machinery, whether the same definition can be applied for plant or machinery, which is there in section 17(5) D. Hanish will be taking us through in this in the subsequent slide, but this was the second question which the Supreme Court had to answer. The third and the last question was whether section 17(5) C(D) are constitutionally valid or whether it is unconstitutional. So these were the three things which the court had to decide. So now coming to what I want to discuss with you before Hanish discusses about section 17(5) D to say what exactly is plant or machinery, I would want you to understand what exactly is 17(5) C. If you really look at the whole of the judgment, which is a 91-page judgment which is given here, most of it is copy paste of a lot of sections and provisions of the law. The judgment, revolves around what is 17(5) D and whether credit is eligible under 17(5) D. Why? Because as Anish said, Orissa High Court, rather the matter before the Orissa High Court was with regards to section 17(5) D only and not with regards to 17(5) C. Nevertheless, as he also pointed out, there were a lot of writ petitions which are clubbed along with Safari matter before the Supreme Court, where the constitutional validity of section 17(5) C as well as D were questioned. Thereby, the court had to first decide whether C and D are constitutionally valid and then decide whether under D, plant or machinery has to be read as plant and machinery as appearing on 17(5) C. So now, To understand the whole of the judgment, first we need to understand what are the credits under 5 and what are rather under C and what are the credits under D. If you look at section 17.5C, which is on the slide now, credits are blocked if it is works contract service when supplied for construction of an immovable property, with some exceptions therein. So first point is, if you have an inward supply of works contract service which you're using for constructing an immovable property, we have to understand saying that such kind of works contract credits are blocked. However, couple of exceptions have been carved out in the section itself. One such exception is if the construction of an immovable property is of a plant and machinery, then the credit would be eligible in the hands of the recipient. Now, what is plant and machinery? I'm not getting into detail, definition of plant and machinery as appearing after 17.6, but still, just to give a gist, it says apparatus, equipment, and machineries which are affixed to the land or through structures, but it very categorically excludes land and as well as building. That means land also is excluded, building also is excluded. Thereby, if you have an input works contract service and your output is of anything other than plant and machinery, the credit is ineligible in your hands. Now we'll have to understand, since plant and machinery excludes land and building, the whole decision with regards to the safari matter is with regards to 17.5D, which is saying whether a building is a plant or not. So one has to understand saying that if the judgment is revolving around deciding whether a building is a plant or not, if plant as appearing in 17.5D is not same as plant and machinery as appearing in 17.5C, the answer could be vastly different when we are treating works contract credits versus other credits in a construction. So if input is a works contract credit, what is a works contract credit? Anything which an vendor is defining it to be classifiable under 9954 in his invoice, and you are required to check whether the credit of the credit HSN 9954 is eligible or not, is explicitly understood as works contract for the purpose of claiming credit. So if your vendor invoice has 9954, you have to close your eyes and understand it to be a works contract service, because 9954 talks about works contract. So now if the works contract is not for a plant alone, which Hanish will be discussing in the next slide, then your credit could be questioned. So as we understood, plant and machinery would never get, and a building would never get included in plant and machinery definition. So if a works contract credit for construction of a building, then obviously the credit would be blocked. However, the second exception which is carved out in the section itself is if your input works contract is used for an output works contract. Assume you're a contractor or a developer who's constructing and selling before OC, or you're a contractor who procures inward works contract and providing service to a developer. Since your input and output are of the same category, which is works contract, the credit would be eligible in such person's hands, being a recipient of service. So thereby, under 17.5C, if your inward is a works contract, outward is a building, credit is debarred. If your inward is a works contract, outward is a plant and machinery, credit is eligible. If your inward is a works contract, outward is also a works contract service, then the credit is eligible in your hands. How are we saying this? Whether 17.5C is held to be valid by the court? The answer is yes. Both 17.5D, C and D, which we will see in the subsequent slide, have not been held unconstitutional. 17.5C also has been categorically said, saying that whatever the phrases are used in 17.5C is very clear in its normal reading itself. Nothing more have to be added or nothing needs to be deleted from the said section. Why? Because works contract is also defined under 2119, as well as plant and machinery is defined after section 17.5.6. Since the plain reading is giving us an answer, the court has said saying that we don't have to read between the lines nor have to insert additional phrases to read it differently. Thereby, 17.5C per se has to be interpreted probably the way we discussed for the last 2-3 minutes. Over to Hanish to discuss on 17.5D.
Sandesh, just before we move to 17.5D, one question which I have.
Sure.
When on 3rd of October, we always remember 2nd of October, being Gandhi Jayanti, but 3rd of October is another day which I don't think we'll be forgetting anytime soon. Okay,
Correct.
so I saw a lot of posts which said, Supreme Court has given a favorable judgment and now we will be entitled to claim the credit. But what you're saying is completely different from, what I read in all those LinkedIn posts, where they said, no, now credit will be available. You can take the credit of the earlier period as well. So So that works contract service, how important is, or almost all the credits which a developer takes are works contract service only?
So good point. I mean, immediately when the news flash came, and then everywhere in LinkedIn or your WhatsApp was spammed with saying that credits are now eligible in the hands of the developer, whoever is into commercial property renting and stuff like that. So the point there rather was very important, because this plant or machinery or plant and machinery actually plays a very important role in understanding whether all the credits that a developer would have would be eligible, or only some of the credits that are only passing the test of 17.5D would be eligible. If you really look at 17.5D, as I told you, I don't want to encroach on Hanish's slide, but nevertheless, so if you look at 17.5D, it says plant or machinery. The whole decision is to decide whether a building is a plant or not, because plant or machinery has to be identified independently whether a subject is a plant or a subject is a machinery. Vis-a-vis 17.5C, which says plant and machinery, that means a subject which we're determining whether it is a 17.5 CED matter or not. Under C, you have to decide whether that itself is a plant and machinery in totality. So if building is not held to be plant and machinery, I told you why it is not, because of the explanation appended to 17.6. Once a building is not a plant and machinery, and there is an embargo to claim credit of works contract service, I at least believe saying that works contract could be excluded from the eligibility of input tax in the hands of the developer. However, having said that, definitely there is one school of thought which is obviously making rounds to say, if a credit is made eligible under 17.5D because of goods and services being covered there, and once I prove the building is a plant and I also prove something is not on my own account, how can that be snatched away from me under 17.5C, calling it to be works contract independently? Because service for our understanding includes works contract. That thought is certainly there. But however, me and Anish were having a very detailed discussion around this. Section 16 enables a credit in somebody in a taxpayer's hand. Section 17 says in those respective scenarios which are there, 17.5 A, B, C, D, E, F, G, H, credits are not eligible if you fall under any of those blocked items. So now we have to probably look at whether a particular credit which we are trying to analyze is eligible or not, passes the muster of all the sections under 17.5, or only passes one of the subsections, sub clauses of 17.5. That is very crucial for us to understand. To my understanding, if you're trying to test an eligibility or rather whether item is blocked or not under 17.5, you have to be clear to say it is not falling under any of A, B, C, D, E, F, G, H. Why? Because all of these are independent tests. It is not that once you pass A, you don't have to test B, C, D, E, F, G, H under 17.5. So thereby, even if a service includes works contract under 17.5D and it makes you eligible to claim credit there, C, because there is blockage of works contract credit there, from the perspective of you building a building which is not plant and machinery, according to me, credit should not be allowed in the hands of the recipient. Having said this, if you look at any of the developers, total quantum of credits that they generally claim, predominant credits are going to be works contract, because all your civil contracts which you give to your subcontractors or the main contractors who construct are all works contract invoices that they raise on you, because those are generally turnkey contracts on the rebuilding. So thereby, I think 70 to 80% of your total credits generally constitute works contract, and those could probably be a challenge, in terms of eligibility in your hands. Hanish, that answers your question?
It poses a bigger question on me. What am I even doing here in the webinar? And see, that's what happens when two passionate people are talking in the same webinar. We will try to cover as much as possible. So my next slide, actually, everything has been covered by Sandesh. That makes my job very, very simple. Thank you very much for that. But yeah, just a brief of something more other than what Sandesh has spoken. Thank you very much for that, Sandesh. Uh, last 2 3 days, Sandesh and I've been only talking about the 75 CND. So very animated discussion we've been having. Right. So now let's go to 17.5D after what Sandesh said. One point to take up from what Sandesh mentioned, 17.5D. See, if we see almost all the contracts which big developers have, they subcontract their entire construction, almost all of their construction, which means the service what they are getting for construction of commercial space will be works contract service, which would mean, because of para 41 and para 31, in fact, what Sandesh also pointed out to me, would mean that you will not get credit on those works contract services. Okay, so we will be very careful when we are structuring our transactions, at least from today onwards. Right now, let's move to section 17.5D. So if you look at 17.5D, there are there is a specific restriction on claiming credit. Now, what is that and how is it different from 17.5C? Okay. Now, here the credit is not allowed if there are three elements which are satisfied. One, what you have procured is goods or services or both. C was covering works contract. Here we are talking about not works contract, which is a combination of both goods and services. Here we are talking about individual goods like cement I have procured, individual services like labor contract or architect services I have procured, or it could be again both, which is could be a composite supply or mixed supply. Okay, and it is used for construction of an immovable property. Again, that is what we are talking about. But that construction of immovable property, that property which I am constructing, should be on own account. Okay, we'll look at after some time we'll look at what is the meaning of this own account. But as of now, these are three conditions which are required to be satisfied. If I satisfy all of these three conditions, the credit will be blocked under section 17.5D. Okay, so what does the code say, or what do we understand? That means if goods or services or both are used for construction of an immobile property, which is a plant or machinery, credit will be available. Okay, so if the end result is a plant or a machinery, I will get the credit. Or if goods or services or both are used for construction of an immobile property, which is not for my own account, because the credit restriction comes into picture only when it is on my own account. So if it is not on my own account, then credit is available. So here Supreme Court made a distinction between the words used in 17.5C versus 17.5D, and they said 17.5C uses the word plant and machinery. When we use the word plant and machinery, that means the plant should have some portion of machinery, and without that machinery, plant and machinery word does not get qualified. Okay, but when it comes to 17.5D, there could be a structure which is immobile, which may not have a machinery, but still that structure can qualify to be a plant. And that structure, in certain cases, when they refer to the income tax judgment, they say that structures could be buildings as well. So if the building qualifies to be a plant, then under 17.5D, you will be entitled to claim the credit of those goods or services which have been used for the purpose of construction of the immobile property. Okay. Then also at para 32, very, very important. Okay. Where at para 32 of the judgment, it very specifically, categorically, it's been said, construction cannot be said to be on a taxable person's own account if it is intended to be sold or given on lease or license. So that means if I'm constructing a mall, again talking about the same example of mall, and I'm going to construct it for the purpose of renting it out, then I'm not required to reverse the credit, because that does not qualify to be own account test. Okay, so here Supreme Court comes up with two multiple tests based on the income tax judgment as to what do you mean by own account, and that's where para 32 comes into picture. It also says what is means and what is the setting, right? So if I am a chartered accountant, not if I am a chartered accountant, okay, so I'm a chartered accountant, I construct a office for myself, okay, and in that office I am continuing my profession. That is a setting in which I am providing the services. That is own account, so I will not get the credit. But whereas I am renting this property to somebody, then in that case, it may qualify to be a plant, in which case the credit will be available. And why I am saying it is may is because unfortunately, though at para 32, they say that if you are leasing or licensing or giving it to somebody on rent, it will not be treated as own account. But in its own judgment, the same judgment, the Supreme Court has referred the matter back to the Orissa High Court to say, please check whether this mall qualifies to be a plant or not. So that was actually not required. If they would have just stopped at 32 and said, okay, credit is available, then that would have been a very beautiful judgment. But now they have said every mall is different. So please check, or every structure is different. Please check on fact to fact basis or case to case basis using the functionality test, whether it qualifies to be a plant or not. And based on that, decide whether credit is available or not. Right? Yeah. Over to you, Sandesh.
No, even I will not leave the opportunity to ask you a question now, obviously.
Oh,
How can I leave that? So now, going by what you said, again, I have the section on the slide. I would want an answer for this, obviously. There are two exceptions, as I said. Okay, one, if an immovable property is a plant or a machinery, then I can claim the credit of my goods and services which are inwarded.
Right.
Second, you also said if it is not on my own account, then credit is eligible. So does it mean that once I prove something is not on own account, should I go ahead and then still identify whether the building is a plant or not, or I can straight away say that credit is eligible in my hands?
Good point.
Is it a dual test or a singular test?
No, if you can, if you can, I'm leaving aside some of the remarks which have been made by the Supreme Court as far as remanding back this matter to check whether there is plant or not. Okay, I'm ignoring that for the time being, and in my view, if you don't satisfy that own account test, okay, which in this case will be beneficial for you, then you are entitled to credit, because what is blocked is three things coming put together, three elements which is coming and put together. One, what you should have purchased or procured as goods or services or both. Second, that should be for construction of immovable property. And third, it should be on its own account. If any of the condition is not satisfied, then you're out of 17(5)(d). So you will be entitled to claim the credit. So while Supreme Court adds another element that you still have to check whether the mall is plant or not, but in my view, if you can satisfy that it is not for own account, that is a sufficient test and you should be entitled to claim the credit.
So, I mean, just to add on to that, if you really look at the analysis of the Supreme Court and also para 32, which you also, mentioned about, on my own account, when I'm trying to prove that it is not my own account, somewhere am I not even saying functionally the building is also a plant? I mean, are they not somehow internally connected? Because the way para 32 is worded, the whole of the para, because we have only given a line at the end of the para. If you read para 32 as a standalone thing, if you're using for personal or as a setting of a business where the business is carried on, is when they are saying it is on own account. But when you further rent it or sell it prior to maybe the completion, they are saying it is not my own account. And also further, when you start reading what exactly is functional test, going into the income tax judgment which have been referred into, somewhere the same thing is emanating, saying that if the building setup is such that it allows me to it is the means by which I provide the service. Say, for example, a commercial building which is rented out. They are trying to say saying that it is passing the functional test of a plant and thereby credit should be eligible. Somewhere both are intertwined is what I am coming to a conclusion. Maybe, I mean, that could be wrong. We'll have to wait for Orissa High Court judgment again to decide whether mall is a plant or not. But somehow I am saying own account and plant are somewhere interconnected to each other. Okay, so
that's a valid point, but my only issue there is because our understanding of the word plant based on the reading of the judgment is through income tax judgments, and income tax provisions itself are completely different. Like one of the judgment which was referred to, where they said that definition of plant includes books as far as income tax is concerned. So why not the sanitary fittings also in the hotel be treated as plant? Okay, so the understanding of the word plant, which has been referred to in the judgment, is completely different from how the word plant has been defined under in the GST law. So I think even if in certain cases it is interplay, and there is another judgment which where they have spoken about the plant, the port itself is a plant because it holds the ship and it releases the ship. Okay, so it is so integral, the entire machinery is so integrally attached to each other that machinery gives the essence to the building. If we have to apply these tests, then the commercial building will completely fail. Okay, I think we will be going a little too far if we are going to apply the test of plant also and then say it is on own account.
I agree. Yeah. Keeping all of this in mind, what we have tried to do in this slide is to maybe categorically, rather bifurcate, different kinds of building that we come across when we talk about this matter of safari. And we have tried to categorize and bucket it into various things. One, in fact, Hanish spoke about this. What is own use or own account? Probably a corporate office or a marketing office or a sales office or your factory building where the manufacturing happens, or your project office if it's a project that you're constructing, could all be for on your own account, because that is not the means by which your services are getting provided. These are all your setting through which the business is actually carried out. So maybe on the first column which you have listed there, these are the ones which are on own account and gets debarred, and the credits may not be eligible in your hands under section 17(5)(d). The second category, what we have tried to do is wherever my output is either exempt or restricted with credit. Say for example, restaurant is standalone restaurant has a 5% output tax with the restriction of your input tax. So if you construct a restaurant and run the restaurant there, because your output is with a restriction of input, restriction that input is not claimed, by default, even if you want to pass the test of functionality, the credit would get blocked because it gets hit under section 42 or probably under 17.2 of the, rather rule 42 or section 72 of the law. Likewise, when we come to a hostel or a PG, we know that recently in July, there was a notification which says accommodation services per person per month up to a value of 20,000 is exempted if the period is for a continuous period of 90 days and all of that. So now if you run a hostel or a PG and your individual or a per person charge per month is less than 20,000 rupees, whatever we argue saying whether a hostel or a PG, residential accommodation or a commercial establishment, your credits of the construction gets restricted. Why? Because your output is anyways exempt. So you may not even get into functionality test when it comes to a restaurant or a hotel, hostel or a PG. The third bucket is very important and which is also repetitively spoken in the judgment all through is with regards to hotels and cinema halls and theaters. What is this? So Supreme Court, while deciding what credits or rather whether a building is a plant or not or what tests have to be function analyzed, has relied on income tax judgment, which very clearly has said that hotel and cinema hall or theater is not a plant in the context of claiming additional depreciation under the section 32 of the income tax law. And that was rather the Supreme Court has relied on that and tried to exclude hotel and cinema halls when it is deciding on various other types of building establishments to decide whether those are plant or whether the credit in those cases can be eligible or not. Very strangely, when it comes to a hotel, the primary service which a hotel performs is accommodation service, and the accommodation service cannot be provided without the hotel at all. So I would say the hotel is a means to provide the accommodation service. I thought without reading the judgment, going by the functionality test, hotel should be the first one to muster and pass the test of functionality, and credit ideally should have been eligible in the hands of the person who's constructing the hotel for running the accommodation service. Strangely, they've excluded the hotels from the ambit of the test of plant from the 17.5D perspective. Likewise, the cinema halls. Why? Again, because relying on the same income tax judgment, which said that hotels and cinema halls are not plant. Both of these are debarred from the test of the functionality of whether the building is a plant or not. Third question, which I wanted to probably ask for myself and all of us here, including Hanish, if you can answer, is whether a building, once it is decided as a plant or not, whether the lift and the HVAC, which is the air conditioning unit, which gets embedded as part of the building, can be, passing the test of a plant or not. Again, why? Because time and again, whenever we have gone for an assessment or an audit by the department, always a question has come up whether lift and HVAC is a plant and machinery or not. Multiple times the question has always come back to say that lift and HVAC gets embedded to the building and becomes part and parcel of the building which gets erected on top of a piece of land. So that question now probably might get answered once you answer the primary question whether the building itself is a plant or not. If the building itself is decided to be a plant, maybe the lift and HVAC can easily get pass the test of functionality of plant, and thereby credit would automatically get released and allowed. However, presume the building doesn't pass the test of plant and building is treated not to be a plant in a particular case, the question again would come back for us to answer whether the lift and the HVAC which has been installed in a building which is not a plant is a standalone plant and machinery or not. That question is a question mark even now for me at least. So we will go ahead unless Hanish wants to answer this, take up this point and give his thoughts around it. You have any thoughts around this, Hanish?
So same thing, Sandesh. I don't think that lift and HVAC can be seen in vacuum. It is part of the entire structure. So the treatment applicable to the building will apply even for lift and HVAC. So if you have given a works contract service for construction and the lift and HVAC is part of it, you are under 17.5C, you will not get the credit. But if you are under 17.5D, you have given separate contract for goods and services, and it is, if you are able to prove that it is not for own account and you are also able to pass the test of plant, then lift and HVAC you will be entitled to claim the credit. The point is that lift cannot be seen, at least lift HVAC, at least we have some arguments to say that it is a standalone asset, but lift cannot be seen as a standalone asset, though it might get classified under HSN of goods, but it cannot be looked into in a isolation. It will have the same treatment which will be applicable to the main building.
Got it. Sure. So the last of the buckets now, after we have bucketed 1, 2, and 3, which we said credit could be a problem in all the three buckets. The last of the buckets is the bucket which I think the Supreme Court more or less has one of the aspects of this is the mall, which is the commercial complex which you're trying to speak about, has allowed this High Court, Orissa High Court to decide whether in the given case the mall is a plant or not. So we believe the last column which you have actually listed down the kind of building should probably meet the test of functionality which is promulgated in the whole of the judgment here, and credit probably would get enabled in the hands of the person who's constructing this particular piece for further rating. If you look at commercial complex and IT parks, it is for further leasing of the property. Warehousing is to provide warehouse services. Co-working spaces is again letting out of the co-working space. Fit outs is predominantly once the building is ready, the internal arrangement of various things which is there. It could have movable part. It could also have immovable part like probably an artificial wall like a POP structure and stuff like that. Those credits would also be probably eligible because it will take the coloration of the building if the building is a plant, and the fitting out also is in the same building where the building is considered to a plant. In my view, probably would also pass the test of a plant, and credit could also be enabled in that hands. So over to Hanish if on the next slide. This is a very interesting slide though. I'm waiting for this slide now.
Yeah, this all thanks to your inputs only, we were able to come up with this interesting slide. So what we did is, whatever we understood till now, we just tried to summarize it as far as the implications if a commercial area share JDA is entered into between a landowner and developer. Okay, so in a commercial area share JDA, the developer is assuming selling some portion of his unit. So assuming there are 100 commercial units coming up, and 60 of it is being retained by the developer and 40 are to be handed over to the landowner. And of that 60, assuming 30 are being sold by the developer, including plus the, I'm sorry, the numbers are wrong. 40 he is selling, okay, because those are being given to the landowner, and 30 out of his 60 share he is selling to the third party. So totally on those 70, the developer is required to pay tax because the input is works contract, which is being used for construction of for providing works contract service. Even under 17(5)(d), the credit is enabled because to the extent it is being sold, it is not on own account. So under both 17(5)(c) and D, the developer will be entitled to claim the credit to the extent of sale of commercial units, including the landowner's units, which he has handed over to the landowner. Now, if he decides to rent out of those 60 units, 30 has been sold. So the balance 30, assuming 25 he decides to rent out, and he had in turn obtained the services as works contract services, he will not be entitled to claim the credit because of para 41 and 31 of the judgment. Okay, but next, if he has given contract not in the nature of works contract, then he gets covered under 17(5)(d). We will have to wait for again the Orissa High Court judgment to decide what are the tests they prescribe to decide whether a rent bearing building will be treated as a plant or not, in under which situations it will be treated as plant or not. Okay, and assuming of the 60, the balance 5 are left, and he wants to use it, he wants to merge all those 5 and create one big fancy office. Okay, then that, and he's using it for his own business, then that will be for own use, and he will not be entitled to claim the input tax credit of the same. Okay, now as far as landowner is concerned, he has got works contract services from the developer for the 40 units which have been given to him. Okay, he in turn sells it. Again, 17(5)(c) comes into picture. Input is works contract, output is works contract. He will be entitled to claim the credit. If he decides to rent it out, then he will not be able to claim the credit because majority of his input is a works contract service which has been, for which the invoice has been raised by the developer. So he will not be entitled to claim the credit because he'll get covered under 17(5)(c). Okay, if it's own use, again, whether it is developer or landowner, he will not be entitled to claim the credit. So the revenue JDA implications are even more interesting, but we might that we'll park it for some other day. But we thought just to summarize and to ensure that all of us get a gist of whatever we have discussed till now, at least we'll take one case study. Right. Thanks, Sandesh. Over to you.
Just a point here, Hanish. Obviously, I
Hmm.
mean, the once there is a JDA, how can we not talk about TDR? I mean, obviously,
Okay.
everybody is interested to understand what is a TDR. We're not getting into that. So,
Right.
obviously, considering the landowner has given a development right, rather allowed the developer to have the development right to develop on the piece of land belonging to him, there is GST implication. We will understand there is GST implication on that. We will not argue that it is not taxable. Assumingly, it is taxable now. Obviously, the recipient of the development right is a developer.
Right.
Where do you think that tax on the development right, which the developer bears, sits in? Is it sitting as a works contract credit or other than a works contract credit? And will I be eligible to claim the credit? If yes, under all of the situations or only some of the situations?
Right. So there's two ways of looking at it. Point number one, that transfer of development rights cannot qualify to be a works contract service, definitely, because works contract service has been defined under Section 2, subsection 119. And those are directly related to construction, those are related to installation, repair, blah, blah, blah. So transfer of development rights definitely will not qualify to be works contract. So it is not part of 17.5C. Now, as far as 17.5D is concerned, I would believe, okay, that the words, meaning this still, a very premature thought. But if you look at 17.5D, it says goods or services are both received by a taxable person for construction and not in construction. Okay, there's a little bit of difference between when you say for construction versus in construction. For should be like very, very directly associated with construction, whereas in is directly or indirectly associated with. So I would believe for would mean what is required to enable me to put up the structure. Okay, and this may not qualify to be that for the test which is required under 17.5D. But even if it is required, okay, at least to the extent of sale, okay, or rent, I should be entitled to claim the credit under 17.5D. Only that own use will be a issue where I will not be able to claim the credit. So how do I bifurcate? Maybe the total floor plan what I have, of which on a square feet basis I might have to reverse the credit. Is there a mechanism for that in the GST law? No, there is no specific mechanism on that. This is how I will have to demonstrate that I have availed and reversed the credit.
Perfect. Thank you so much, Anish. Probably go to the next. So now we understood, what are the implications, how a credit has to be identified, how credit gets blocked under 17.5C and maybe gets released under 17.5D because I'm able to prove the building that I'm constructing is a plant. So now, obviously, in the past, right from the time the High Court judgment came in the matter of Safari, lot of developers, lot of companies have taken very different positions. We will just try to understand what those positions would have been, or rather what their people could have taken positions and what should they do going forward. So one is to understand what has happened in the past. There are certain class of developers who took a position saying that we will not avail credit. Anyways, we feel that 17.5 CED may not be held unconstitutional or credit may not be permissible, and they've lost the chance to claim the credit. However, for 23-24 at least, there is still time limit up to November 30th. That means October returns is still the last date to claim the credits pertaining to construction if they believe that the building which is coming up is a plant. So they may want to claim the credit for 23-24 at least, because credits up to 22-23 at least is time barred. So 23-24 still the time limit is available for one more month. You may want to assess the situation, quantify the credits, see what is going in C and see what is coming in D, and maybe want to claim credits of goods and services other than works contract if the final output of the building is a plant, based on whatever is the pronounced in the judgment. Second class of developers are the guys who have availed credits and also utilized credits. Probably I would say this category is the most riskiest category, assumingly if tomorrow the building is held not to be a plant. Why? Because they've also availed the credit and utilized. So if they have to pay back the same to the government tomorrow, if the decision by the Orissa High Court finally says a mall is not a plant based on the test laid down in the Supreme Court judgment, then they might have to pay back the credits. One, obviously in cash because they've already utilized. Second, interest provisions also could kick in. Penalty, probably an argument is possible saying that 74 may not be possible to be invoked. Why? Because the matter was pending before the court and the court has already obviously directed the High Court to decide whether a plant. So there is a subject matter of interpretation required. So possible argument that penalty provisions cannot be invoked, but interest for sure for this category of developer will get attracted. The third category is a category where they've availed and smartly not utilized. I would say majority of them would fall under this category where they've availed the credit pending decision of the Supreme Court. They decided saying that we'll decide whether to utilize or reverse once the finality is achieved or attained rather. So this class of people probably would continue till such time the Orissa High Court decides to say whether a mall is a building is a plant or not. They may have to continue the way they are doing right now. So they will continue to probably accumulate more credits if there are more credits in the form of construction, and then maybe decide once the matter attains finality based on the High Court's decision. There are also a set of people who have availed and reversed with the intention to re-avail whenever the final decision is made on the matter. Probably I would say these set of people are also running into risk. Why? Because availment, there was time limit, they availed within time limit. They reversed. For reversal, there is no time limit, obviously. However, for re-availment, there is no specific provision under the law for this category of re-availment, because the only couple of categories which are thought through in the law is Rule 37 when you don't make the payment to the vendor within 180, and Rule 37A where the taxes are not paid by the vendors in his 3B. So whenever he pays the taxes in 3B, I get the right to re-avail the credit back. So there is no re-availment time. However, when you look at the category which you're speaking about now with regard to construction credit, there is no explicit provision under the law which says you can avail, you can reverse and choose to re-avail later on whenever the matter attains finality. If you really look at plain vanilla reading the section, it appears that the re-availment also has to be within the time limits prescribed under section 16.4. If 16.4 time limits are gone, maybe you will have a challenge to prove yourself saying that the re-availment is possible in your hands. Maybe that is a round of litigation, rather one more round of litigation you have to pursue till probably High Court or maybe till Supreme Court. This is what has happened in the past. And maybe
Yeah,
what
Sandesh, I'm
yeah.
sorry if I'm interrupting you. Two more points here just to add. In fact, Section 64 was also challenged before Supreme Court in Safari, just for this reason that a lot of people would have missed claiming the credit. So the expectation was that Supreme Court might give a favorable order. So enable the credit for everybody from the beginning, because 16.4 is only a procedural aspect of claiming the credit. Unfortunately, there the Supreme Court has very clearly said that Senvat credit again, input tax credit is merely a benefit which is being given, and I don't see any arbitrariness in putting down a last date within which you have to exercise your right to claim the credit. That is point number one. And point number two, as far as this availed and reverse category is concerned, Sanjay, when we also go meet the GST officers who are inquiring about these cases, they say that, look, please, you have availed the credit. What will you do? You please reverse it, and whenever the judgment comes, you will re-avail the credit. A lot of officers have suggested this, and unfortunately, a few of the real estate companies have, believed in what the officers would say and have reversed the credit. So there are a lot of category of companies who have reversed the credit, though they had availed the credit in anticipation that they will get a favorable order as far as Safari is concerned. So,
Perfect.
So a lot of people will fall in that category.
Yeah. In fact, I remember having handled one matter where we have availed, we had not reversed. Matter was the subject matter of audit, 65 audit by the department. Department said, because you have availed, I want to issue a notice. We have in fact reversed under protest, even though there is no concept of under protest under the GST law. We have reversed under protest and responded to the show cause notice. An order is passed demanding tax, with wherein they have very categorically mentioned saying that the demanding tax, because even though the reversal has happened, why? Because the assessee has reversed the ITC under protest, the matter is live. So maybe there you may probably argue saying, since it was informed to the department saying I am reversing under protest with a right to reserved to reclaim whenever the matter attains finality, maybe could be a better standing as compared to a guy who was availed and reversed with the returns itself.
So maybe another category, availed and reversed
Another
under
category.
protest.
Under protest, yes. So now, okay, so we understood what all has happened in the past and what should be the action there. But going forward, what should we do? Going forward, it's very important for us to understand what are my credits and do they fall under 17.5C or do they fall under 17.5D? If it falls under 17.5C, we all know now that works contract credits for a construction of a mill property is not an allowed category of credit. So thereby your works contract would be a challenge. Maybe you want to test the litmus test and see whether tomorrow this provision also could get challenged. Maybe you want to claim and not utilize it and carry forward till such time there is a 100% certainty about 17.5C. Probably you can do so at your own risk. But however, works contract seems to be from the judgment not an eligible category of credit. 17.5D, all other goods and services apart from works contract, probably you will start availing those if you have not availed in the past, or if you have availed in the past, you will continue to avail in the future as well. Maybe the High Court judgment will give you better understanding whether the building that we are constructing in a given case is a plant or not. So it's important for us to understand whether the building is a plant or not. If it is a plant, considering various aspects discussed, including para 32, which Hanish was speaking about, maybe there is a ray of hope and then you'll start availing credits on that. However, if the construction is maybe for your own account, like your corporate office or a marketing office, as or the ones which we discussed, there is probably very clear, or rather there is clarity now to say that the credit seems difficult there. Maybe you may choose not to start availing the credit there and capitalize along with the building. At least the income tax depreciation will commence from the capitalization date itself. It does not have to be deferred for a future date. So that is one more aspect which you may want to consider. The third and very important aspect, according to me, is the way the trade is happening today may have to undergo change. There has to be structural change. There has to be contractual revisions in terms of especially the works contract. Why? Because works contract, if you believe is fitting under 17.5C and not under 17.5D, would become a blocked credit. Thereby, you might have to renegotiate in terms of the way the contracts are structured. You may have to probably split the contracts. Again, it should not be an artificial splitting where you give the contract to the same contractor and say you bill goods separately and service separately. Maybe department might view that as artificial splitting and club that to be calling it as works contract. So that may be risky. Maybe you might have to split the contracts and then wherein the goods could be on your account, whereas services could be on another person's account, or goods and services could be on two different parties' account. And wherein you get an invoice with goods HSN and you get an invoice in service HSN, which is not a works contract service. So this restructuring, one may have to go back to drawing board, understand how could one restructure given the situation in which they are and the structure in which they prevail, and may have to look at it, because if you have works contract credits, as we have been saying for last 30 minutes, that credit could be a challenge. It will continue to be a challenge. You have to structure a little differently to probably enable the credits, calling it to be goods and services separately. I'm sure all of you are very smart enough to catch this and then restructure your contracts to suit the requirement. Over to Hanish.
Yeah, a few other aspects which we can consider, and we got inputs from a few of our friends on this because we're not a subject matter expert as far as income tax is concerned. Special mention about Ajay Rotti, who had helped us put up this desk as far as income tax is concerned. In fact, he volunteered. He called and said, "I want to discuss in your when you speak on your webinar that these are the things which somebody will have to take care of when they are talking about when they are thinking about reversing the credit." Okay, so if the asset which I have considered for income tax purposes as a capital asset, and if I decide to reverse the credit, say assuming we've been talking about where we can avail the credit, but now if on the other side we are thinking that let's reverse, we don't want to litigate further, then you can add that value of reversal to your capital asset for the purpose of computation of capital gains. So that is possible. Second, if it is not a capital asset for capital gains purposes, but you have capitalized it for your business income purposes, then this value which you are reversing now, you can add it to your gross block. And there the analogy we can draw from the favorable tribunal judgments which have come in the context of debonding of assets, where the question was whether the BCD paid subsequently, or initially I had bonded the assets, but subsequently I had debonded the assets. So basic customs duty, which is not a salvatable input credit, can that be added to the block of asset where the tribunal have given favorable judgments? This, yes, it can be added. Okay, and third, if assuming these are revenue expenses which we are talking about, those explanation to 17.5 CND specifically says that construction, when we are talking about construction, it refers to only those cases which are capitalized. But for some reason, even certain revenue expenses, are in that borderline case, and you wanted to be a little more conservative, you want to reverse that credit, then that write-off of GST credit, we are told, is not treated as a prior period expenditure. It can be treated as maybe a bad stock or bad asset or bad debts equal to that, and so you will be able to reverse that credit and claim the income tax benefit as far as reduction in taxes because of the impact of write-off is concerned. Okay. Now, we've come across few rental agreements where, the rent is based on the total estimated cost which the developer is going to incur. If there is a specific clause in your agreement where the developer has clearly said, meaning it could be useful for both developer and tenant, that I will debit you the rent over a period of next 10 years, okay, for the cost incurred by me, and the cost will be actual cost. And now if the developer is deciding to reverse the credit, which was earlier not factored in, then there is a scope of renegotiation of rental. So this judgment is not just restricted to just availing credit, but there could be, what we want to highlight is there could be a larger impact even for IT companies, okay, or for e-commerce operators who have agreed with their developers that they are going to compensate them for the cost incurred by them. And so what is the definition of cost? If you decide today to avail the credit, then the cost reduces. If you decide today to reverse the credit, that means the cost increases. So even so not just restricted to the developer, but this judgment has far-reaching effects even for other sectors. Okay, other aspects, very few, but something which you would want to consider is whether you want to claim this credit or not. And if you decide to claim the credit, then along with that comes, while you see that 18% benefit on your total cost, okay, that is the benefit. But what are the other costs which you are to incur? One is the legal cost which you are going to incur, because this matter again is going to go to the Supreme Court. Second, you have to pay a pre-deposit of 20% if you are going to the regular route and not directly to the writ petition. Okay, so at the first level of appeal, you'll have to pay 10%, and then again you'll have to pay another 10% of the tax being demanded. That is your 18% input credit. And unfortunately, if you are in the category where you have availed and utilized the credit, this 20% will have to be paid by cash. In other cases, you can still reserve your input credit itself which have not been utilized and use it as pre-deposit. But if you've utilized it, then this money goes in by way of cash. And third, depending on whether the judgments say that the mall which you have constructed or the commercial space you've constructed is a plant or not, if it goes against you, then like Sandesh was mentioning, while you might get away with penalty because there is no fraud which you have committed, but it's only an interpretation issue because of which you have claimed the credit. But interest is something, if you've utilized, then interest is going to be a huge cost. And today 18% is a huge amount of interest which government is charging if there is any default as far as the taxpayer is concerned. So 18% over a period of 5 years is almost 90%, and none of the judgments get closed within 5 to 7 years time. So that means you're talking about equal liability or more than equal liability of the tax which you were required to pay. Okay, so these are also some factors which you have to consider to decide whether you would actually want to claim the credit or you don't want to claim the credit. Right. I think that's all we had. We have a lot of questions in the chat box. We'll take those questions one by one. But before that, we have a small WhatsApp community where we send daily alerts on latest happenings of GST. So you can scan this QR code and join our community. We'll be more than happy to have you in our WhatsApp community. Right now, let's go to the questions one by one. Sandesh, I'll read out few of the questions. The easier ones I will answer, and the difficult ones I will bounce it off to you. Right. So allow me that discretion. Right, the first one comes from Sukrut. Whatever we have covered, I am just going to ignore. Okay, so Sukrut is for a developer who is in the business of construction of a building and subsequently subleases the building. Is he entitled to claim the credit? We have already covered that, so Sukrut, we will be skipping that. In case of companies doing renovation of corporate office at a works contract, but is in the process their movable goods created such as customized furniture, etc., can the company take input credit on such movable assets even though it is part of the works contract service? Uh, Bhavani asked this question. See, if you are constructing some customized furniture, it would be better that, like what Sandesh was mentioning, don't give a single contract because it's actually not part of works contract. It is not part of the civil structure at all. The contract which you are giving, these are bifurcatable contracts. So instead of asking your contractor or your subcontractor or whoever the concerned person is who is giving you the services of renovation, ask him to give a separate invoice, ask him to apply the correct HSN code. Okay, and in your contract also, even if it is a single contract which is defining the deliverables, bifurcate the deliverables into part A, part B, part A civil, part B customized furniture, which will help you claim the credit. Anything else to add, Sandesh?
Nothing. That's it.
Yeah. Again, Sukrut's question we have covered, whether
We have covered.
purchase of cement and all.
We have covered.
Yeah. So next one, Rubal has the question. I'll bounce it off to you. How do we justify the intention to lease or give on rent?
So it's a pretty open-ended question. So Obviously, when I'm starting to construct a particular project, if I have intention to use for my own account, I think that is very clear because I'll put up my own office there. So there is no dispute. The only question which comes up is I might start selling it maybe in the course of time, or I might lease it after the project is completed. If I start selling or I have an intention to sell, obviously RERA comes into picture. So if you have a RERA registration, which you obviously seek, maybe that is one evidence which proves saying that what are you trying to do. So that is also demonstrating your intention of the constructed building. So if you have a RERA and you start selling, obviously the credits are eligible. As we said, 17(5)(c) as well as D would allow you credit if you're further selling before the completion certificate is received. So there again, there is no problem. Or if you don't know whether you will start selling before OC or after OC, or you will further rent it, still, I would believe that if the plant after completion, rather the building after completion could be demonstrated to be a plant, you would start accumulating credits. If by the way you sell before OC, you will utilize the credit to the extent of the output tax which is required to be paid on the sale of such commercial building. However, if you don't sell but you hold the building and rent it post OC for renting purposes, I think still if you are able to demonstrate the building is a plant basis of whatever we discussed, the credit of other than works contract services would be eligible in your hands. I think it answers your question.
Right. Suresh Kumar has a very important question, a very interesting question actually. If company spends on expansion of the project for increase of capacity, is ITC eligible or not, or whether it will fall under the definition of plant or not? I think the answer to that lies with the what is the treatment for the main building. So whatever applies to the main building, whether that qualifies to be a plant or not, the answer will remain same even for the expansion of the project, expansion on the project. If you are using it for your own use, you will not get the credit. If you're using it for renting or for other commercial purposes, there is still a possibility that you will be entitled to claim the credit.
Correct. So maybe next again, Suresh, construction or expansion of plant for increasing of production fall under plant and ITC eligible as per my opinion. So I think he's trying to say your production line. So those
Clear
are
case.
planned. Yeah, those are planned in correct. Those are planned in individual capacity. They got nothing to do with the civil building which you're constructing. That credit should obviously be eligible and should pass the test of plant and machinery under 17(5)(c). If at all there is any works contract going into this, because even if you look at 17(5)(c) plant and machinery definition, any structural requirement or foundation which is built for plant and machinery would also be eligible, except the land and building. So I would feel there you would get the works contract credit, and the plant per se, which is the machinery which you're talking about, should be eligible because 17(5)(d) allows you to claim credit of goods and services, including plant or machinery.
Sanil, next question is very interesting. Okay, that is the exact argument which ASG took against the assessee to say that you should not be entitled to credit. So thanks, Shridi, for bringing that up. I'll just read out the question. What if I have given the rent for construction and so basically he means I have considered a property and given it on rent, and I take it back. Should I reverse the input credit or not? So your thoughts, Sandesh, on that? The same
Basically,
argument.
we discussed this, we did not put this in the slide. We thought it would be too complex for us to discuss for today, today's session. So, okay, let's rephrase this. I construct the building. Once the building is complete, I will rent it out. Say I'll rent it out for few years and subsequently sell the building. This is precisely the point which Mr. N. Venkatraman also brought up, saying that if they do this, there is tax loss to the government and all the credits which are accumulated for construction will get used out for payment of rental tax on rentals. This is precisely the point which was brought up by the ASG. However, I mean, if you really look at, there seems to be a loophole here. Why? Because assume I build the building, claim credits on goods and services other than works contract, rent the building, pay up rent, say for example 5 years. Subsequently, after 5 years, they sell the building. Seems like reading all the provisions under the law, right from 16(3) to rather 16(2) to 17(5) to 18(6), Hanish, 18(6), read with 40 to 43. I'm not getting into all those provisions. Seems like if you put this building into use for 5 years, you probably have to don't have to do any reversal of input tax credit when you subsequently sell the building after 5 years. However, if you sell it before 5 years, probably there could be an exposure of reversal of proportionate credit on the inputs, rather the goods going into the building, which is capitalized in your books of accounts. Proportionate reversal under 18(6) Right, with probably rule 43 might come into picture. You might have to reverse something there. But if it's beyond 5 years, I would feel it's tax free. You don't have to pay output tax nor have to reverse input tax.
Too complex. All this reference to so many sections. Right. So we'll go to the next question. What is the definition of plant and machinery, immobile property, and construction activities? Definition of plant and machinery, you will find it as an explanation under section 17.5. For the purpose of GST, they have defined. Immobile property not defined under the GST law, so we'll have to go to General Clause Act and the other related acts like Transfer Property Act, etc. Construction activity again not defined, so we don't have answer to this. Next,
To some extent, construction has been explained to means and include. I mean, to
it
include.
includes, yeah,
Yeah.
not means actually.
So it is expanding the scope there. Maybe
Yeah.
below 17.5 C and D, there is an
There's
explanation to say for the purpose of 17.5 C and D, construction includes repair, renovation, and all of that. I mean, there is a definition there. Probably one may refer there.
Now, again, Pavan also has a similar question. What are the tests which decide whether a building is a plant or not? Very important and very interesting question. As of now, there's no specific answer because Supreme Court itself has said that we want you to examine whether something qualifies to be a plant or not. But there are two aspects which they have considered. Now, one is the functionality test. And I'll just read out one part of the judgment which says, if if something is essential tool of trade and not merely serves as setting in which business is carried out, then it will qualify to be a plant. Second, a building specifically designed and constructed with some special features to attract customers will also qualify to be a plant. So these are two guiding principles. The most important being it is an essential tool of trade and not merely serves as a setting. So if I, like, coming back to the same example, I'm a chartered accountant, I have an office that's just a setting, credit will not be available. But that is so essential tool for me to render the service or be in the business. Okay, then it will qualify to be a plant, and in which case the credit will be available. Now, Umesh has a little tricky question. Okay, he says, what if I am not liable to maintain books of accounts? So I'm under presumptive tax as far as income tax is concerned, and hence I don't have concept of capitalization. Then whether credit is allowed for works contract service or not?
So you want me to answer, Hanish?
Yeah, please.
So if you really look at the definition of construction, which we were speaking about a while ago, it says construction includes A, B, C, D to the extent of capitalization to the said immovable property. Now, one of the argument, or rather, probably what department would take is to the extent of capitalized to the said immovable property is only in case of whatever is the inclusion part in the definition. That means construction, whether capitalized or not, is not to be looked into. That by default is understood to be an immovable property. Only the ones which are appearing as inclusion part, like your renovation, repair, and fitting out, all those which appear in the definition have to be proved saying that whether it is capitalized to the said building or not. So to answer your question, if this works contract service is for first time construction, which is the original works of the building, whether you capitalize or not, argument is definitely possible to be taken that it still fits into 17.5C, thereby credit could be blocked. However, another argument probably to just counter is construction includes so and so, so and so, so and so to the extent of capitalization means whatever is appearing there, including construction, should be capitalized. Only then it is debarred, or rather considered as construction for 17.5C. I think that is a little far-fetched. The first argument probably has a little more stronger, footing. So thereby credit, rather the credit, whether it is capitalized or not, rather the building, whether capitalized or not, would still fall under 17.5C, and the credit of works contract could be a challenge.
Venkatesh has a question. I think there are some typos there, so I will just rephrase that. I have taken a land on lease and I have developed the land for warehousing purposes, and I have incurred all the improvement expenses. Can I claim input credit on the same or not?
I don't know.
Again,
So,
Venkatesh, the issue will be whether it is a plant or not. In our personal view, when you are using it as a warehouse for your own goods, then it will be on own account. You may not be entitled to claim the credit. But say, assuming you are a third party warehouse for e-commerce operators like say Amazon and all, you're operating the warehouse for them. In that case, it is a specially constructed and designed building to attract customers, which will qualify the test of plant, and you will be entitled to claim input tax credit of the same.
Sanket says, what if building is constructed for employees to stay? Right
Own
away
account.
on own account, credit is gone. You will not get that. Mm.
Okay.
Umesh,
I'm skipping Sandesh, few of
yeah.
them which are repetitive. I'm
Mayank,
going to Mayank's question. Yeah, Mayank's question. What if the constructor, what if I construct a office building for rent, but we have a forward purchase agreement with a fund to sell the company which has that building? My God. I think Mayank, we will touch base offline. This is too specific a question. I'd be more than happy if we can take questions which are of general implications. But Mayank, do get in touch with us, and we'll be more than happy to understand the specifications and respond to this question. Sachin has another question. I have a altogether different question.
we
We'll
can
ignore
skip
Sachin.
this. Not relevant, I think,
Not
but
relevant.
yeah. Yeah.
I'll Sachin, I'm in touch with you over WhatsApp, so I will respond to that on WhatsApp. Um, Vivek says it's a great session. Thank you so much, Vivek. Appreciate. What is the Shreyans has a question? Uh, Sharanya, sorry. What is the availability position in case the constructor has used his own meter for construction without letting it out to works contract and subsequently has let out the building? Yeah, that's the point. You don't fall into 17.5C, you move to 17.5D. The plant test comes into picture, and once you satisfy that, you will be entitled to claim the credit. I have constructed apartment and sold plots on this construction. Can I claim input credit? Harsha, we are talking today about commercial construction. Maybe we will take up a slide. We will take up a session specifically on plotted developments and residential apartments very soon. Okay. Udaya has the the last remarks which we would not want to speak about. There may be retrospective amendment reversing the judgment, Safari judgment. 100% possible, because when this discussion of plant and machinery and plant or machinery was brought up before the court, the argument from the government side was that it's only a error in drafting. So which means they themselves have admitted that they have done an error. They will definitely rectify it, maybe. So we'll have to wait for the budget announcements of the GST council to see whether they make those changes retrospectively or prospectively or not. Thank you. So I think we have answered all the questions. Thank you so much, everyone, for joining in such large numbers. We had almost 330 plus members attending this program. Thank you very much. Thanks to our organizer, Mansa, who ensured that there was pin drop silence. She has muted all of you. Thank you very much, Mansa, for that. Yes, Sandesh, over to you. Thank you.
Nothing. I had a very good time. I enjoyed, discussing all the points with you guys. Just that we keep discussing internally when we discuss this with the people, all of you here. It just furthermore, makes us happier. Thank you for attending, and we expect you to keep attending our further future sessions as well. Thank you once again. Yeah, that's
Thank
it.
you. Thank you.
Thank
See
you
you
all.
guys.
Thank you. See you.